Hello and welcome to Editors Roundtable. The sensex and the nifty ended in the red for the week. The mid-caps outperformed large caps by rising a little over 1% on Editors Roundtable. Today, we will take a look at the key expectations from earnings in the second quarter. We also do a deep dive into the key triggers for the two Tata companies, Trent and Titan. Apart from this, we will bring you an analysis on all the major expectations from the upcoming Ministry of Finance meet in China. I'm Surabhi Upadhyay, and with me are Nimesh, Prashant and Nigel. So folks, quiet day in terms of price action for the markets. Nifty's not changed much, but a huge week in terms of news from one of the biggest business conglomerates, one of the biggest business houses and families in the country.
Absolutely, and I think we've talked about this. I mean, it just, one day you're there, one day you're not there, and but the outpouring and the love and the sort of tributes which came through, and I was talking with Anuj, I think, the other day, I was saying, well, I don't think any other business leader will get this kind of the tributes which poured in, more than his business acumen and what he did for the group, which I think is tremendous, just as a human being. And I think more of the commentary and the tributes were focused on this particular aspect.
It's more about human aspect, the philanthropy of that man, right? That's something which stood out for a lot of people, that the way the group and he himself was so much into philanthropy and inspired so many young and new generation entrepreneurs to go into that field of being a bit entrepreneur, being a bit philanthropy as well. So I think that was a big hallmark of that particular man, that he actually taught India Inc. and a lot of corporates to look at philanthropy in a big way.
Well, society over profitability, that's something that he stood for as well. And he was very, very keen to take India to the globe. And, he marked India's ascension into the globe. And in certain ways, that ascension over, even over Britain. So business, well, a lot of debate with regard to the moves that were made. But the vision was clear. Take India to the globe and society over any kind of profitability. Human capital was something that he really preserved.
No, absolutely. And I'd say that, in personal experiences, while we talk about businesses and business leaders all the time, but a lot of friends and family, I've never seen before people talking about a business icon in such an emotional way. And we saw those scenes, the outpouring on the streets of the city as well. Exceptional person, a legend, and a life very well lived. And by the end of the week, we had the announcement also coming in, and now we know that it is Mr. Noel Tata who takes on the baton. And it was very interesting, like Shireen was pointing out, that this was, the trustees felt that this is what Mr. Ratan Tata would have wanted. Pick it up and move on, move ahead, and sort of keep the business going.
I'll tell you, Surabhi, just to pick up on Nigel's point, just to go back to Mr. Tata, the point that he took India global.
Yeah.
I remember when the Chorus acquisition was made. I remember being sort of on air when it happened. Now, because, so many Indian companies do foreign acquisitions all the time. It's not a big deal. But back in 2003, 4, 5, I mean, it was a big deal, and it was billions of dollars, and it was a iconic brand. I mean, so it was a different time and place, and so in that sense, absolutely, he is the one who really opened the gates.
Absolutely. Unleash the animal spirit, so to speak. The phrase was coined later, but I think that was the moment when those animal spirits of India, its ambition, were actually, out there. So we'll, of course, talk about this. We'll talk about two Tata Group companies as well. Nigel's looked at a very interesting analysis between two of the major constituents on the Nifty. But before we get to that, just a quick summary of what the week was like on the street. So very quiet, like I said. Not too much changing on the indices. And if you thought that there'll be a big rebound in the Indian market this week, well, the bulls had to be disappointed. And three key reasons behind that. Number one, the China question remains unanswered. And we're walking into another weekend of uncertainty, not knowing if we'll indeed get this big bazooka stimulus. And Prashant will talk about that as we go forward. Number two, the uncertainty around earnings. The season is just about kicking off, and this is the first time in many, many quarters that we're going in with very subdued expectations. So are earnings really slowing down? Are more downgrades coming? That's another big question for the market as we sort of got through the week. And the third point is that oil prices are still very volatile. No one knows what Israel is going to be up to next, because by the time we were ending the week, Brent had again moved back to 79 to the dollar. So if you look at the tally, the Nifty is down about 0.2%. Mid-caps and small caps have done much better. They're up about, little over 1% each in terms of sectors. Defensives like pharma and IT, that's where the money was going. And, FMCG was surprisingly down, a big loser this week, down about 2% on the FMCG index. Metals, the China trade was sort of unwinding, so to speak, so lots of selling on metal counters. Energy, commodities, so to speak. And PSUs, PSU banks, overall PSUs, as well as the Nifty Bank itself, by the way, didn't really fight for the bull's cause. So that, in a nutshell, is a summary of the week.
Well, let's actually throw it to our guest who's now joining us, right? We have Harish Biyani, Senior Fund Manager at Kotak Mutual Fund, now joining us. Harish, good to have you with us here. Thank you very much for your time. Just the overall sense first, Harish, is this largely still a risk-on kind of an environment? Because there were doubts which were seeded in the minds of many, not this week, but the previous week, when there was a lot of FI selling. When you get a week worth of $5 billion of selling, you start to doubt whether this is it. This is the one which will now finally lead us into a period of consolidation, sideways move. The globe, though, incrementally at the margin looks pretty solid, and no particular problems here in India as well, except maybe valuations. So just wanted to start there. Go on, Harish.
Sure. Hi, Prashant. So I agree with you that, given the current macro construct, we are in a long-term business upcycle. There's no question about that. Within that, there's an intermittent slowdown today. And to think about this, just reflect back on the past. If you look at the period post-COVID, what happened is that the private sector capex picked up. You had the public sector capex, which also picked up significantly post-COVID. Exports also picked up because of all the global supply chain issues, and overseas companies were building up inventory. So exports also picked up in a significant way. And the top 15 to 20% of India consumed significantly post-COVID. There was a revenge consumption that happened. So if you think about the public sector capex, the consumption and the exports, in the first 6 months of this particular year, these parts have slowed down. Now, is this a permanent slowdown or an intermittent slowdown? To us, looks like an intermittent slowdown. We should see an uptick, given especially in the second half. And with that, given how earnings will shape up incrementally, so first half, especially second quarter, let's not expect a significant earnings uptick. Even the upgrade to downgrade ratio, there'll be more downgrade versus an upgrade. Not a cause of worry, given that consumption, exports, public sector capex should pick up in the second half, and private sector capex, as we all understand, is on a long-term uptrend, and that should continue to move up. In that, there's this big part, another big part which I missed, is the entire real estate capex. Real estate capex picked up significantly post-COVID. That has once again kind of taken a breather in the first half of this particular year. But given the pipeline of launches, given the pipeline of land acquisition that will happen in the second half, once again, you'll start seeing an earnings uptick. So no cause of worry, more of an intermittent slowdown.
All right, well, Harish, we'll come back to you, but the market, we'll have to also look at earnings, right? Because we're going into it in full flow now. TCS reported, and there's been a bit of a disappointment. And it's not as if the earnings season is expectations are high. Actually, it's a low expectation quarter. Nimesh, you've looked at all the preview notes.
Yes, Prashant. So it's a low expected quarter, but it's going to be a multi-quarter low in terms of earnings in quarter two. So that's the headline. In terms of revenue growth or maybe the net income growth, it's just going to be 2% YOY. Most of the brokerages have cut the EPS estimates for FY25 and FY26 by 4% and 3.5%. So that's a consensus from a brokerage point of view. I guess apart from the earnings, the festive season demand and the commentary around that would be very critical for a lot of sectors and companies in quarter two. So that's the overall picture. Now coming to the individual sectors, first is autos. A strong growth, revenue growth of 5% and EBITDA margins to improve by 60 basis points. So autos could be a sweet spot as far as earnings are concerned. Banks, that's going to be a big sector, right? Expectedly, muted PAT growth, even there is going to be a NIM decline of 10 to 20 basis points, but looks like it's priced in. For NBFCs, again, the disbursement and margins are going to be under pressure, but within the financials, it's going to be the MFIs which are going to have a big impact, and that's what need to be seen as to how MFIs report in quarter two. Within the consumer apparels, the leader has been Trent, and looks like that momentum is going to continue. Street is anticipating a 56% top line growth YOY for Trent even in quarter two. So that's a stock to watch from an earning perspective. Within the consumer staples, the street is anticipating a bit of uptick in the value growth across most companies. Even there's going to be and that's going to be largely led by pricing. But in that, watch out for Pidilite. That's likely to outperform all the other peers within the consumer staple names. The other big sector is going to be oil and gas. A lot of stocks have been buzzing around that, but from an earnings point of view, ONGC is expected to be weak. Oil India, you'll see a 4 to 5% increase in terms of volumes, but it's the downstream companies which are going to see an EBITDA impact or down of 40 to 50% on a YOY because of high base. So that's going to be having an impact on the OMCs. The other big sector is going to be specialty chemicals. Every quarter the hope is that there will be a revival, but even in Q2 the expectation is going to be quite muted. The demand is just not yet picked up, but the key in the specialty chemicals would be whether there is a further guidance cut by the companies for FY25. We've already seen few companies like Aarti cutting down the guidance for full year. So that's guidance in the specialty chemicals is going to be the key. I was looking at a Citi report and they put out some interesting names which are going to be having a positive and negative surprises. According to the Citi note, in terms of positive surprises, watch out for Maruti, a very good number. The mix is going to have an impact on the margins positively. Trent we spoke about. Bank of Baroda within the PSUs, again against the consensus, Bob is expected to report very strong quarter this time around. HDFC AMC is a stock to watch within the financial stock. So again is expected to have a very strong quarter in Q2 for HDFC AMC. And within the consumption names, Britannia is something which Citi expects will surprise positively as far as Q2 is concerned. In terms of negative surprises in Q2, individual names, Apollo Tyres is something which Citi believes high cost pressures are going to have an impact on the margins for Apollo Tyres. Titan is likely to disappoint within the consumption names there. Honasa is another name which Citi believes can disappoint because the trade channels lead to is indicating that the demand has been quite weak there. And the last is Sri Cement. Within the cement names, overall cement is expected to be weak, but Sri Cement expect a weaker EBITDA per ton on as far as volumes and price weaknesses. So these are the few surprises, both positive and negative. But the headline number,
right?
I haven't taken.
Because Infi last quarter, if you remember, was the big positive surprise.
Yeah.
And stock moved up 7-8%. And this
But
time, Rima was telling us.
I didn't took IT simply because we've done extensively. Rima spoke about it last week. And for Infosys, apart from earnings, it's the guidance up.
So Rima was telling us that analysts are expecting them to up their guidance.
Exactly. That's a hope.
Supposed to be better than TCS.
And the strength in the counter is actually visible. It's just 1% away from 52-week high, and also the valuation gap for TCS has totally narrowed. So
correct.
the screen is telling you that the street is sensing something. Now they'll have to deliver.
There's a build-up, exactly. In fact, speaking of expectation versus delivery, Harish, come in on this. We haven't seen a quarter of a single-digit earnings growth in a while now. But to be fair, to argue the market's also cooled off. From the high of 26,200, now we're at sub 25,000. So is this already priced in? Or if the earnings are as pedestrian as, mid-single digit, does the market have to correct more to match that reality?
Right. So as stated that this will be an intermittent slowdown, there will be concerns which will emerge because of this slowdown that we will see in the second quarter of this particular fiscal year. But please recall that the third quarter is where there's a festive season, there's this wedding season where consumption should ideally pick up. Third quarter and fourth quarter is typically where government capex is higher. On average, 60% of the capex or the incremental sales for a lot of government-led companies comes in the second half of a particular fiscal year. So a lot of things will, and real estate is another significant part of capex that should start seeing an uptick in the second half of this particular year. So for a buyer of long-term equity like us, a second quarter which should be okayish, but where the downgrades will be higher versus an upgrades, should ideally give us an opportunity waiting for such a quarter.
So you would buy the dip in that sense?
We have our long list of names and we are hoping that those stocks correct because of intermittent slowdown, and we'll certainly be buyers in those specific names.
Speaking of stocks, one of the names that Nimesh mentioned, which will probably disappoint, is Titan. And I know that we've got Nigel who's been looking at the differential between the way Titan is performing and the way Trent is just breaking through the, all kinds of ceilings, right?
Well, that's right. I want to focus on the biggest winner and the biggest loser from the Nifty pack in this week itself. So let's go across and let's tell you. Well, the street seems that Titan had got into saris. Well, that was diversification. But Trent getting into lab-grown diamonds, they fear that there is cannibalization that could take place out there. Just looking at the screen, it appears the street would have preferred actually that Titan went the Senco way and launched lab-grown diamonds under the Titan brand itself. So they went ahead, they've launched the brand name, which is known as POM, in the West Side stores, and that was the big headline for the week. The bigger positive those for the industry, because suddenly you have a big conglomerate coming in there, throwing its hat in there, and also creating awareness about lab-grown diamonds. To give you a few details about the industry first, global size of the diamond industry is close to around $80 billion. Out of that, you have lab-grown that's close to around 20% of the effective market. In India, lab-grown diamonds are growing at around 15 to around 20%. You'll say, what about pricing? The price difference between a lab-grown diamond as well as a natural diamond could be anything between 60 to around 80%, I understand. So a lab-grown diamond is far cheaper in comparison to a natural diamond. But there are some perceived risk. I'm terming it as perceived risk because there are a couple of things that are not very, very clear. One factor was lab-grown diamonds, well, they corrected by close to 50% from the peak. So everyone was getting a little bit nervous. But natural diamonds also corrected close to around 30% from the recent peak. The other big question is, being Indian, you want to know what is the resale value. But maybe the counter argument is those that are buying diamonds are not really interested in the resale value. So there are a couple of question marks with regard to that. But those are perceived risks. However, we had a voice that joined us on the channel from Limelight, Pooja Madhavan. She said that price correction, well, it was not at the retail level. It was at the wholesale level. She also went on to clarify that actually there was not lack of demand. There was rationalization of profits, and that's why lab-grown prices had fallen down. But let's go to both these two stocks and what Kotak had to say. Kotak says, with regard to Trent, that they have the potential to pioneer the broad-based adoption of lab-grown jewelry here in India. So that could be a big driver out there. And they're saying that they can see accelerated growth in the next around 2 years. They also go on to make an interesting point. It has the potential to be the Zudio of the lab-grown jewelry market. So that's why Kotak is fairly positive with regard to this foray into lab-grown diamonds. On Titan, well, they were cautious and they continue to reinforce that cautious stance. But they're given a direct and indirect effect. On the direct side, they said that in fact it could pose a bit of a risk to a couple of their brands. You know, if you look at Carrot Lane, Mia, as well as some of their solitaires. So it could pose a risk to their studded part of their business, which is close to around 33% of their mix. So a third of the studded business could see some bit of a direct risk. The indirect risk could be the buyers could be in a state of flux. Should we be postponing our buying? That could be one factor which will weigh on diamonds. And also the other couple of factors is, you know, we didn't have them correcting their diamond prices as much as the industry, and competition is heating up as well. Finally, just want to pull out a couple of points with regard to the promoter holding. Well, the promoter holding in Titan is close to around 53%. But Tamil Nadu Industrial Development Corporation, they hold a larger chunk in comparison to the Tata Group. While in Trent, the Tata Group in the last few years, they went ahead, they issued some shares to themselves, and they increased their holding from around 33 to around 37%. On the chairmanship, well, on Trent, you have the chairman coming in from the Tata Group itself, while on Titan, it's not from the core Tata stable, so to call it. And also for a bit of history, on Titan, the current RBI governor was at one point of time the chairman as well of Titan. So that's the big headline over there. Trent moving into lab-grown diamonds. Some would say that, in fact, a bit of cannibalization for Titan, while others would say, well, it's diversification. They like it. Well, Harish, I wanted your view on this. Titan, there is, as it is, a big competition aspect that's playing out over there. But lab-grown diamonds, as a segment, it seems, there's a lot of interest. How do you view it?
Sure, Nigel. So, look, Nigel, without getting into specifics of either a Titan or a Trent, in general, how a market thinks about such changes is that if you look at any stock, if the range of outcome is widening, there's a disruption risk, and the outlook is deteriorating, on average, the multiple will shrink. And vice versa, if you look at some other businesses where the range of outcome is narrow, range of outcome could be in terms of earnings, the outlook is improving, the earnings looks fine, and there are option values, new option values, which is getting created. Market loves such stocks. So this is what is happening as we speak in some of these names, not necessarily in these two stocks, but in many, many other names across the market.
You know, Nigel, personally, I want to do two things. I want to walk into a West Side store, and there is one in Fort. I don't know if they have those diamonds.
The lab-grown
diamond. I don't know how
ones.
much they cost.
No, I'll tell you how much they cost. I've done a lot of research on this. There's a little bit of silver that they mix with there. So it's between around 20 to around 29,000 approximately. Well, if you go to any other normal store,
Which is for a 1 carat stone, right?
Yeah, it'll be close to around 65 to around 80,000. Why is that? Because they use a higher amount of silver. This is all the research that I've done.
So it's cheaper in West Side.
It's cheaper
Lab-grown diamonds are cheaper in West Side.
in POME.
In POME,
POME. Yeah.
And the other place I want to go to is a Zudio store, which I've not been to. And so Shilpa our colleague was telling us that the closest from where we are sitting is the Phoenix Market City in Kurla. And she said, you walk in, the mall is empty, but Zudio is packed.
Yeah.
I mean, the mall is empty, but the store is packed. So, I mean, it's...
No, they've managed to grow both the sides because, West Side is one brand, Zudio's is the other. But they've managed to position to cater to all segments in a beautiful way. And the numbers are really speaking a story for themselves. Okay, on that note, we have to take a very, very quick break. Come back on the other side and all eyes will be on China over the weekend. Will that bazooka stimulus get delivered or not? We discuss this after the break.